Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, Shay or Shy. Thank you for choosing to support the channel. Here we have the Atlanta Fed putting out its GDP now. It's just a running estimate of real GDP growth for the current quarter. Its latest estimate is 0% growth for the quarter. This is as of today, and this is down from 0.9% just 1 week ago on June 8th. And since the middle of May, this Atlanta Fed GDP estimate has been on a pretty steady decline, now sitting right at 0. And remember, real GDP growth decreased at an annual rate of 1.5% in Q1 of this year. So if Q2 keeps this trend and does end negative, that would officially put us into a recession. Polmar shared some more ridiculousness from Ford dealers. If you take a look at the market adjustment for this F-150 Lightning, $69,000, bringing the total price to $140,000. Pure insanity. You really get the sense that they don't want these EVs to sell well because this is just outright customer gouging. In Canada, Tesla is still trying to charge per kilowatt hour instead of per minute at superchargers. Measurement Canada has denied Tesla's request for temporary approval to bill customers on the amount of energy consumed instead of how long they're plugged in. Tesla sent a letter back on May 3rd asking for a temporary dispensation, but Measurement Canada essentially said no because they're still working through developing these new standards. The per minute charging is confusing. There's different tiers based on different speeds and for how long you're charging at certain speeds. So if you would like to help Tesla in this endeavor, I'll link this website below, Engage Tesla. You can record a video or leave a comment with your name, where you live, and why the Canadian regulators should make this change. There seems to be a little bit of anxiety around something Elon said, so just want to play that and then add my thoughts.
But the overwhelming focus is solving full self-driving. And that's essential. And that's really the difference between Tesla being worth a lot of money and being worth basically zero.
It's important to note, earlier in the interview, Elon was talking about Legacy Auto making their money from selling parts to their existing fleet and service, not from new car sales. Thus, them selling high margin replacement parts allows for Legacy Auto to sell new cars at effectively zero margin. Elon said this creates a massive barrier to entry for any new car company because you have no existing fleet. So for these new automakers with no fleet, they, meaning Tesla, Lucid, Rivian, need to sell cars at a higher price, and the product needs to be compelling. And Elon just believes without electrification and autonomy, new car companies cannot succeed. I personally would not read too far into this. I just think Elon was trying to stress the importance of autonomy to the future, and even if you take out Tesla's FSD sales revenue, they would still have excellent and potentially industry-leading margins. Funding has been secured for a pretty big new Megapack project in Australia. This is a 300 megawatt hour project. We'll come back to that, and this one's a bit different. It's equipped with grid-forming inverters that are capable of operating in a virtual synchronous generator mode. Basically, operate in a manner that is very similar to a conventional generator, providing crucial system strength services in the region. The battery installations are expected to be completed in stages during the first half of 2023. These 300 megawatt hour Megapacks are expected to be capable of powering 40,000 homes in the area for around 2 hours. There's some debate on the biggest BESS in the world right now. Is it one that's commissioned, under construction, or does it have to be complete? Either way, setting that aside, the one from PG&E using Tesla Megapacks called Moss Landing BESS is 730 megawatt hours, and that's considered one of the largest in the world. So this new one in Australia using Tesla Megapacks, almost half that size. Bloomberg Intelligence put out this research report. All I want to highlight for now before I finish reading through it, within the first few pages, they are predicting that Volkswagen is poised to overtake Tesla in terms of global EV sales by 2024. So you better believe this one is making it into the prediction tracker. So here we have it. And sometime when we get a slow news day, we'll come back here and check some of these other predictions. Some ironic news here, as Texas is setting new records for electricity demand. It surpassed 75 gigawatts on Sunday, smashing the 2019 record. So far, the grid has been holding up pretty well. Now, several experts told CNN that it's owed in large part to strong performances from wind and solar, which generated 27 gigawatts of electricity during Sunday's peak, close to 40% of the total needed. You may have seen in the past some leaders in Texas have blamed renewable energy for some problems that they've had due to being unreliable. Now, this energy professor says Texas is, by rhetoric, anti-renewables, but frankly, renewables are bailing us out. Speaking of solar and wind, they're rocking. That really spares us a lot of heartache and a lot of money. And I love this line from an energy researcher. Because the price of wind and sunlight hasn't doubled in the past year like other resources, they are acting as a hedge against high fuel prices. We get an update on FSD 11, probably the most anticipated FSD release in recent memory. Elon says, "I'm driving an alpha version of FSD on the highway and it's not quite ready. Probably ready for wide release this summer." Let's just do this real quick. With that clarified, for us in the Northern Hemisphere, summer will officially be June 21st to September 22nd, so let's see if Tesla and Elon can deliver. And yes, this latest prediction from Elon has also been added to the tracker. In case you're not familiar, this FSD version 11 is supposed to be the single stack. Right now, FSD Beta driving on city streets has one neural net, and then when a Tesla goes on to the highway or freeway, essentially it shifts to autopilot or navigate on autopilot using a different architecture. So this FSD version 11 will transition Tesla into a single stack neural network for both highway, freeway, and city street driving. And this is exciting too for all of you out there in a right-hand drive market. Elon said FSD Beta probably later this year. Once again though, for just a few hours at a new supercharging site in Limburg, Germany, apparently non-Teslas were able to use it. However, a few hours later, that site has been removed from the Tesla app, so maybe this was a mistake, or maybe it's a sign of something coming in the future, opening up superchargers to non-Teslas in Germany, but not yet. I feel like I need to clarify this impending impairment charge for Tesla holding Bitcoin in Q2, whether it's 300 million, 400 million, either way, it's not actual money lost. These are unrealized losses. Once again, it's just an accounting requirement. That said, if Tesla were to sell now, they will then realize that loss, but in my opinion, they shouldn't sell now if they've held this long. Now sure, if Tesla's thesis on Bitcoin has changed and for whatever reason they think it's going to zero, then yes, they should sell it now. However, I would assume that's probably not the case and they should just hold it until in the future it goes back up, if of course it does. But right now, Tesla has unrealized losses of in the neighborhood of $500 million, but they don't need this capital right now, so in my opinion, they should just hold it and see what happens. The main point, these unrealized losses and impairment charges are not realized losses. They're very different things. On a similar note, I had to share this tweet from Shibatoshi. This one made me laugh, and it does seem to be pretty accurate if you look at the credit markets, mortgage rates, and the inventory and supply, all of that. This seems to be fairly accurate, and if you scroll down, Elon would seem to agree. From Coverager, it's being reported that Tesla has filed for its new insurance program in both Maryland and Florida, which would expand its coverage to 9 states. You Floridians, however, are looking at a few-month wait as the effective date for the Florida release isn't until October 20th. The effective date for Maryland, much sooner, actually tomorrow, June 16th. Florida will definitely be a good state to be in terms of potential customers, but we also have to remember that people in Florida like to drive fast and aggressive. Spoken Reviews dropped another video on the new Model Y from Austin with the 4680s. He asked 2 different Tesla advisors about the charging, if you should stop at 90% because we all are presuming this is a nickel-based pack. Both of the advisors said yes, the 90% charge limit or recommendation does still apply. There was some speculation that this new pack could be charged to 100 like an LFP or an iron-based pack. That is not the case. One more clip from the Tesla owner Silicon Valley interview with Elon that I want to comment on.
Unless something changes significantly with Rivian and Lucid, they will both go bankrupt. They're tracking to bankruptcy. They may not say like that is currently, like if this were an airplane, they're going like that. So if something happens to go change, okay. But currently, they're at intersection with doom. You know, I hope they are able to do something, but unless they cut their costs dramatically, they are in deep trouble. And we'll end up in the cemetery like every other car company, with the exception of Tesla and Ford.
Hear me out. I never root for anybody else to lose. However, I'm a big believer in learning from life lessons, and sometimes that can be painful. I have said in months past that there's no guarantee that Rivian or Lucid just make it just because they're new trendy EV car companies. So many people invested plenty of money into these companies thinking just because Tesla pulled this off that now any other EV company is just going to do the same. This could not be further from the truth. Tesla is not normal. There's a reason I started this channel 2+ years ago. Tesla is just a different breed, and what they've done and pulled off still is not understood by most people. And I really believe Lucid and Rivian and their really rough road ahead is going to highlight the magic of what Tesla has done over the past decade plus. And look, to those of you that have invested in Rivian or Lucid, don't at all feel bad or anything like that. I mean, this story is far from over and everybody has different investing objectives. I'm just saying investing money based on overall themes and trends and expecting those two companies to do well just because Tesla has is a dangerous, dangerous game. Tesla stock is set to be included in 2 new indices launching on July 6th. The CSI Global Intelligent Vehicle Index and the CSI HK and US listed Intelligent Vehicle Index. So not sure how popular these will be out of the gate, but potential for more money to flow into Tesla. Talk about an ongoing saga. Here we have Elon set to appeal a recent judge's decision that the ongoing agreement between Elon and the SEC will be upheld, the one that basically has oversight for what Elon can tweet in regards to Tesla. Yes, still from that funding secured tweet way back in 2018. Elon not pleased with that decision, so we'll see what type of basis he has. Some more reports are trickling in that Tesla is staying true to its word of letting some of its workforce go. Insider found 11 LinkedIn posts from Tesla employees who said they'd been laid off as part of the cut. Rob reported on that AP article talking about the crash data NHTSA was set to release. Now NHTSA is coming out and basically saying the data is somewhat useless, saying this first-of-a-kind data doesn't yet have proper context and is only meant to be a guide to quickly identify potential defect trends and help determine whether the systems are improving the safety of vehicles. A NHTSA administrator said, "I would advise caution before attempting to draw conclusions based only on the data we're releasing. In fact, the data alone may raise more questions than they answer. My question then becomes, well, what are you doing releasing the data?" And maybe it's true that some of these other automakers can't report the level of granular detail that some would want. However, just so we're clear, the government has mandated since June of last year that companies report incidents involving level 2 ADAS systems. Just want to also add, remember that Tesla does record autopilot accidents even when the vehicle was rear-ended, so part of that number will be accidents that aren't Tesla's fault unless that data has been removed from the data set, which we're yet to find out. Drive Tesla Canada shared this video of the Semi, and I want to play it for you guys so you can hear the regenerative braking and the quietness of the truck. It was doing some long-range testing based on people spotting it in different areas, confirming it was the same truck by the badging on the truck. Stellantis has been forced into layoffs at its stamping plant, which is one of the biggest in the country at Sterling Heights. They did not say how many employees will be let go. They did say it will be from the bottom up and it should begin in the next few weeks. Here we have Ford's CFO saying rising commodity costs have wiped out the profit it initially expected to make on the Mach-E. Now, I don't know if this is a typo, but this is a huge figure. It says the Mach-E saw its costs increase by roughly $25,000. While the Mach-E was profitable when it was first launched in late 2020, that is no longer true. Ford's also saying its credit arm, Ford Credit, has seen an uptick in delinquencies. However, there is a silver lining as Ford is saying they are still seeing demand for new vehicles. They did say we're very lean on inventories, unlike past recessions, and we have an order bank that's significant at over 300,000 units. As an industry and a company, we're heading into this possible recession in a much different position than we've ever been in before. Here we have it. The Fed chose to raise interest rates by 75 basis points, the greatest increase in 28 years. A historic increase. We are definitely in historic, unprecedented times. That just means unprecedented opportunity if you play it right and have the patience. This move brings the Fed funds rate to 1.5 to 1.75%, and the Fed expect the benchmark rate will end 2022 at 3.4%. And the Fed still reaffirming the committee is strongly committed to returning inflation to its 2% objective. So far today, with about an hour and a half left in trading, the markets are digesting this fairly well. I think at least some of this was priced in as the market was expecting this 75 basis point hike. However, sometimes it takes a few days for models to be adjusted, and we could absolutely see more significant dump-offs after this. That'll do it for today. Please take a second to like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.